Antonio, thank you very much for taking the time for this conversation. I'm sure it's going to be a great one. I would introduce you as a curious human being. You do so called deep dives where you spend sometimes weeks looking into one single company that has a lot of complexity and a lot of uncertainty. And then you share your insights on Twitter and Substack. Now, could you give us some insights into your deep dive research and writing process? Maybe that would be a good first questions to start with.
Sure. Well, firstly, Costa, thank you so much for having me. We've been planning this talk for weeks, and I'm very excited to do this. Um, and then answering your question, the process is very. I try and study things that I'm naturally interested in, which are very wide ranging. Because, as you say, and I think is the case with you, I'm a very curious person. So I'll be studying anything from biology to I don't know, physics, history, finance, anything. And then when I have an understanding of where the world is going to go in the next 10 to 20 years that I previously didn't have, then I start looking for companies that fit that worldview, and I try to identify vehicles. So the optimal vehicles to make that vision of the world happen. And so what I do is I actually end up discarding a lot of companies before I look at one deeply. So I always say this, but my output is predominantly bullish because I've filtered out a lot of companies that I don't like. And then the process of the deep dive is just I read as much as I can on a given company and its surroundings. So maybe about the history of the industry it's in. What have been the cases of disruption and success in the industry and stuff like that. And then I get deeper into the company and I try and synthesize a view that I think is productive, right? So if you could write anyone, so you could write a write up on a company, with excruciating detail and going through every single aspect of the company and stuff. But many times it's not productive because a lot of that knowledge is already widely held in the market. And what I'm actually looking for is for a sort of unlock in a key part of the thesis that can actually go counter a given narrative, right? So to give you an example, when I did the meta deep dive last fall, the prevailing narrative in the market was that the company was going to become irrelevant, and a couple of sub narratives, but basically the big one was TikTok is going to kill this company. And the sub narratives were something like, and it can't monetize WhatsApp, and it's not innovating, and so forth. And then, so studying social media and stuff, I realized that this is a space that was only going to get exponentially bigger in the coming decades. Because at the beginning, social media seemed like it was just to share photos of cats and dogs and stuff. But over time, we've realized that it's actually even a new way of working and a new way of connecting. And we see people that have been sharing professional thoughts or highly relevant thoughts in the given vertical for the past 10 years, and now these people are essentially sovereign individuals, and they have audiences which are very valuable and probably the most valuable asset that they own, right? So having developed that view, I then looked at the company and I realized that these narratives surrounding the company were not true. And so that was a counter narrative that I came up with last year, and I produced it as I described at the beginning of my answer, which is just studying the history, studying the company very deeply, and then looking for the key unlocks in a thesis, which
Sure.
can or cannot be productive, but ultimately they are.
Sure. How did you discover that you have a passion for this? Maybe not writing per se, maybe it didn't start as, having a passion for writing, but maybe researching, or was it a passion for learning?
Yeah, so like I think now in hindsight, I've always been like this, but I only realized this now because actually I was very disenchanted with the educational system from the age of 16 years old to say maybe 24, 25. I think from the age of 16 to 25, I actually didn't study additionally a day in my life, right? So I studied very hard until the age of 16, and then I sort of got very bored, and then gradually disappointed with the traditional system, and I sort of just gave up with it. I actually was an entrepreneur from the age of 23 to 26, something like that. And then from the age of 25 onwards, I just started reading a lot because I sort of gave into that curiosity once I was free of the burdens of this system, right?
Hmm.
And then I just naturally got back into investing because I actually did my first two investments in 2014, and that was just, I think that was just an expression of the way my brain naturally works, which I'm always looking for big ideas or big counter narratives that I can project 10 years out. That's what
Sure.
my brain does as a default mode.
Sure.
And even since I started writing on Substack and stuff, I've been doing that in domains that I don't usually write about, but I've been doing a big one on healthcare in the past 2 years, which includes some experimentation on myself, and it's been a fascinating journey. But basically, from the age of 25 onwards, I started reading a lot of books, and then I got back into the market when my entrepreneurial stuff was done. And I found a thesis which was interesting, which I've written a lot about, which was Blackberry, and I wrote a post on Medium and it
Yeah.
went viral. And I was like, this is kind of cool, having your ideas be shared and having getting feedback from people, meeting other people. So then I started looking deeper into this, and that's sort of how I crystallized this version of me that writes deep dives. But it's sort of a combination of me having always been like this, and then gradually life taking me in this direction.
Sure.
If you would have told me at the age of 18 that this is what I was going to do
Hmm.
full time, I would have said, no, you're kidding. You know.
Yeah, I understand, and of course, having passion is one thing. Finding what you enjoy doing is very important. Having curiosity is important, and to some extent, I do understand your maybe your view when it comes to the educational system. I was somebody who did well in school, with the exception of attendance. I just found the classes boring, so I really skipped a lot. Um, and I've put a lot of thought in if you had the power to reorganize parts of it, right? What would you change? I think the educational sector in general is going to be disrupted in the coming years for sure because it hasn't changed much. But if I go back, for example, what you do requires curiosity, but it also requires a lot of discipline. It requires that you sit down for hours, days, weeks, be bored, keep researching, find information, make sense of everything, and then summarize everything, right? Now, this isn't necessarily something that is being taught, right? You need to figure it out on yourself by yourself. I'm not sure if curiosity is something that can be taught or can be maybe stimulated to some extent, but these are very subtle things that I don't really see being worked on during the educational or during the times when somebody is in school. Do you think
Yeah.
that, I mean, what are your thoughts on this?
So I guess like that you obviously have a demographic distribution of brain types, I think, and then some people are going to be really good at being they have a great taste for decoration,
Sure.
style, clothes, cinema, stuff like that. I have zero of that. I try and go shopping once in a while, which I maybe do once or twice a year, and I can't tell for the life of me what's a good looking piece of clothing and what's not. Um, so, like, I think that the education that you give to someone that has that sort of talent, and someone that maybe has the inclination that I do, that you do, towards more of a form of intellectual curiosity, of ideas, connecting ideas, perhaps not an affinity towards getting very deep in one domain of knowledge, but actually sort of peeking your head into a number of them and then connecting the ideas. I think it's very different. But so I think that because the current educational system is designed for an industrial era, it's basically focused on sort of normalizing everyone for a standardized industrial output. And now as we move the layer of differential value in the economy is now knowledge. It's not like how do we or not. It's not like screwing. How can I say this? It's not knowing what screws to tighten. Sorry, not knowing how to tighten screws, but what screw to tighten. Right. So it's like it's ideas, it's connecting ideas. That's what's driving value now. And as I was saying, it turns out that you can do that in many domains, not just the one that I'm doing or that you do, but you can do that in fashion, you can do that in architecture, you can do that in farming, you can do that in a whole lot of things. So I think that the way I would focus, I would shift the educational system was towards helping people first identify their passion. And
Sure.
that can be a long process. And then in the meanwhile, of course, teaching people some of the basics, that giving them the tools that they need to find the passion, and then of course the tools that they need to be citizens, right? Because then people come out of the system knowing how to do you know complex calculus, but they can't do taxes or they can't manage personal finances. So it's kind of a combination of giving people the necessary tools they need to survive or to thrive, actually, and then
Yeah.
in the meantime helping them find their passion, or even like getting more meta than that, develop the muscles to identify a number of passions yourself throughout life and be able to pivot from one to another and then come back to whichever one you want to ultimately create a set of skills that makes you hard to replace. So, as Naval says it, I think is specific knowledge. They can't
Yeah.
actually be taught because that sort of knowledge is what actually enables you to then go out there and make money. Um, in the creative economy, by sharing content that no one else does. In the stock market is by having ideas that are contrarian and right. So that's how I would frame it.
That's a very great explanation. Thank you for that. I agree. It's having
Well, thank you.
a standardized process for everyone is definitely not the most optimal one. And I know that most of the viewers or listeners are anyway people who are interested in finance and investing and valuation to some extent. One of the companies that you mentioned was BlackBerry. It was known as the old school kind of cell phone company, but today that's not the case. Could you introduce us to BlackBerry? What is your original thesis, as well as how it has changed a bit over time?
Yeah, so of course. So as you said correctly, BlackBerry was originally a phone company, and that's pretty much the perception that most people that I talk to about BlackBerry have of the company. And obviously, the after that initial thought, the second thought that people express is, how is this company still alive, right? So the reality is that nowadays, what it fundamentally has is a real-time operating system, which is the sort of operating system that you use to run devices that can't fail. So think of these devices as the Starship, the SpaceX Starship, cars, medical devices that you use during surgery, stuff like that that just can't fail. So that's what you use a real time operating system in. And so BlackBerry's real time operating system is in 230 million cars plus on the road today. So on its own, each one of these instances of a operating system is not really that impactful. But what I actually see in this operating system is a network. So all these cars and then the new ones that are coming on the road every year, because BlackBerry makes continuous design wins with the top OEMs on the planet other than Tesla, right? So all these new cars coming onto the road every year with a new instance of BlackBerry, they're actually forming a network. And so this network, if fully instantiated, so if all these cars were connected today, it would be the largest network on Earth in terms of data production as it refers to driving and car usage in general, right? So then what I see in general is there are two rival networks on Earth at the moment that are positioned to unlock driverless vehicles. One is Tesla, which in terms of being a closed loop of actually having cars on the road connected to one another and then to servers back at home, and so data moving around and the cars learning, they are miles ahead of BlackBerry. But BlackBerry is aggregating all the other OEMs, so like BMW, Mercedes,
Yeah.
Rivian, VW, all these other car brands that people buy on Earth. They're aggregating them, and they're going to instantiate this network that I'm talking about via a software abstraction, which is created 50-50, so a joint venture with Amazon, known as BlackBerry Ivy. So BlackBerry Ivy is now live, and we see basically key players in the auto industry signing up to use this platform. And then this platform is basically going to be like like an app store for cars. And so it's going to do all the data management within a car and then between the cars for different OEMs and stuff. And it's going to recycle the data around to unlock applications based on insights created from processing this data. So AI. And so if you zoom out, that's one thing that's happening now with BlackBerry. But what's also happening is they are deploying this operating system across a number of other verticals. So like medical and industrial. So they are penetrating medical very fast as well. And So if you zoom out in a 10 to 20-year time horizon, so long as the company continues, by the way, which is it's always uncertain and so forth, the potential is that this company becomes the backbone of the Internet of Things, which has been anticipated for many years, but there's been a sort of inflection point with the pandemic in which people in general have understood the value of having connected things, so things connected to the internet. Because during the pandemic, we couldn't access many things that we would have liked to access, and had they been connected, we would have been able to operate them. So talk about factories, talk about um, perhaps medical facilities, stuff like that. That's all very useful. So once if in 10, 15 years down the line, BlackBerry becomes the backbone of this and is basically the enabler of the Internet of Things across a number of verticals, the next thing that you can do, which is where I think that the operating leverage and thus rising free cash flow per share is likely to come from, is deploying additional services on top of this distribution channel. So think of it this way. Suppose that today BlackBerry could instantiate BlackBerry Ivy fully on 230 million cars that are on the road today, right? So this would just connect all these cars. When these cars produce data and are connected to the network, they fundamentally have a series of vulnerabilities, so they could get hacked, and
Sure.
therefore this distribution channel becomes a magnificent, powder for cybersecurity companies to deploy their XDR offerings on it. So XDR is the latest iteration of cybersecurity, whereby we basically train an AI to defend the system just by learning from data. All right, so this could happen not just in the car vertical, but in the medical, in the industrial vertical, in the aviation vertical, which they're moving into now as well, as of a year and a bit ago. This is obviously a very long-term thesis. It's very uncertain because revenue has not risen very fast, or not at all, actually, in the last couple of years. The balance sheet is strong and so forth. I think that the company is financially sound to continue doing what it's doing. But what it's actually doing, which is where I'm going to, is under the hood. It's not immediately visible when looking at the company, which is they're creating this amazing moat at
Mm,
in the IoT space across verticals. And so I think that this moat can, over the next decade or two, deliver amazing fruits.
mm. So you mentioned 230 million cars. Um, I think the statistics was that annually there are about 60 million cars being sold.
Yeah.
So it could be that, I don't know, BlackBerry has their operating system on a third of them. Let's say it's about 20 million, probably just more, but let's assume it's 20 million. So in in 10 years' time, this number will be significantly higher. So basically, you're betting that first of all they have the access to a lot of data that they can use, and basically it all comes down to having data and being able to upsell, whether that's through the App Store at some point, um, or maybe just using the data and build something else on top of that.
Yeah, yeah. So once they have, and in the verticals in which they do have the OS implemented at scale,
Mhm.
that can then be instantiated into a network by connecting all these devices. And then once you have that network, you end up having data aggregation, which then you can use to train different AI models for all sorts of things.
Mhm.
I was talking about cybersecurity, but one example for cars is predictive maintenance. So if you can train a model whereby if you were to be able to observe the entire Volkswagen fleet, you will understand what sort of driving leads to more mechanical issues with the car, statistically speaking. Therefore, you can just say to a random driver, to a specific one, like, "Hey, if you continue driving like this, you're gonna have to take your car to the shop in 6 months. Do this and that so that then you don't have to take it." Or predictive, like, bring it by now before, so we can fix it up for you before it becomes a more of
Mhm.
an issue. So it's all that insight unlocking,
Sure.
which is what the economy is going to be about in the next coming decades with AI, that they can enable via this distribution channel, which is basically BlackBerry QNX.
So it's all about having data, the value of data, and actually using whether it's AI or not to get insights out of it. Now, I know
Yeah,
you've
of course.
analyzed a lot of successful companies as well. Do you see something that is common for them? Do you see some pattern?
Yeah, absolutely. And this is something that I've actually been thinking a lot about for my BlackBerry thesis, because BlackBerry doesn't seem to have this as of yet, or I haven't seen it yet. But these companies that succeed, this is something that I think has been visible in capitalism for the past 60 to 70 years. But basically, the companies that have succeeded wildly, and that we know many of them nowadays, like Amazon, Walmart, Costco, even 3M before it had the mismatch with the pollution and all of that. They have an incredible pace of iteration, and so they are just iteration machines. They try a lot of things. They discard the ones that do not work, and then they double down on the ones that do. And so what they do is they constantly produce additional levels of value for customers. But the fundamental difference is that what they do is they share the economies of scale that result from that. So if you see Amazon, Amazon has obviously been gaining in uh, revenue generation power by getting bigger, because it becomes more top of mind for consumers, and then consumers develop this habit of just clicking a button and buying something on Amazon instead of going shopping somewhere else. And that's why physical retail has been on a downtrend, generally because of e-commerce. But Amazon could have, at any point in the past 10 years, leveraged that position in consumers' minds and just cranked up the prices. And it could have produced at will incredible spikes in free cash flow per share, and no doubt the market would have responded. I don't know if every time, but many times. So it could have cashed in much of that consumer goodwill, just in exchange for short term profits and short term appreciation of the stock and stuff. But consistently, and even though of course the temptation is very high, what the company has chosen to do is give back economies of scale to the customer, which is like, okay, we're getting bigger, we're becoming more top of mind, we're now more efficient. Let me now drop prices even more. So they've been doing that subsequently, and we've seen a number of companies succeed wildly, uh, since a long time ago. And these two properties of fast iteration and sharing economies of scale are what seem to underpin long-term value creation machines. Of course, the natural components of good and ethical management, a strong
Sure.
balance sheet, a reasonable business in that it can produce profits and is thus not a ridiculous business, right?
Yep.
And stuff like that. But these two properties are what seem to underpin today's winners. And that's how, of course, I was saying BlackBerry doesn't have that. I'm not sure if it does. It's very early on in this phase of becoming hypothetically an enabler of the IoT. But other companies that I do own that I am certain have that property is, for example, Spotify, which is a very controversial pick of mine. But I would argue that Spotify, organizationally speaking, has a very similar DNA to Amazon in that. And there's this graph going around Twitter where you basically see Spotify's monthly active users growing very fast, quarterly, and the growth in the past 5 years has been spectacular, but gross margins have stayed flat. Now, many argue that that is just due to the company's inability to drive gross margins, which of course it's not easy, but I would argue that it's more a function of returning economies of scale by taking that long view. And of course, they have an incredibly fast iteration pace, which is how they've left Apple Music behind, and these competitors with much more resources and stuff. But it's fundamentally a decision on behalf of the company's management to delay gratification and share that economies of scale with its user base. So just those two properties.
Okay. So add value to the customers. Make sure that they love the product so much that they're not going to switch anyway. I mean, there are a lot of people that are literally addicted to Amazon, that they just keep ordering because it's just very convenient. And then when it comes to harvesting the profits, if there's a way to delay them but still create value, do that. I think Amazon is probably at that point when it is so big that it would be difficult for them to continue investing. I know that their capex went up a lot over the last year, so they keep building kind of the foundation, the infrastructure, and they've been building that. I mean, they have been delaying profits and free cash flow for since the beginning, right? I mean, what was it, 1999? So at some point, of course, that that will change. But it's interesting to see at least the two things that you see in common. For Spotify, I did look into that as well. I mean, there's no doubt that it does a great job, right? And the number of users, whether it's monthly in some cases or daily measured, it's not that relevant. These are returning users that continue using the platform. I'm not sure. I think that the uncertainty there is. Um, I'm not sure why YouTube, for example, doesn't branch out into something similar, because ultimately it is some sort of of a search engine, right? You can filter out, except it's not for video, it's for audio. And you can find almost anything that you're looking for, whether that is a podcast. There are a lot of audiobooks as well. There's music, so the offering has expanded quite a bit. I'm wondering why, for example, YouTube having already everything in place doesn't branch out into, or Google through YouTube doesn't branch out into something like that, something comparable. And then the second point is, of course, the margins. I don't think that because I did look into Spotify a couple of years. It was pretty much the same level price wise as it is today, and I think today it is fairly valued, not overvalued. I don't think that a 25% gross margin is low. I think even if it stays at that level, the company is still doing quite well. So I'm not sure why the expectations are that suddenly there will be a company that will aggregate everything and get 50%. I mean that's unreasonable.
Yeah. So I mean, just going back to your first observation, the precursor of that I found in my research, the precursor of financial success over the long run, and thus stock price appreciation is obviously a competitive position that is strong, because that is how companies come about in the first place. They have this innovation, they have a breakthrough moment, so forth. But then just the way an organization works. So if you dig into Amazon's culture, it really is at many levels the arguably one of the world's best places to fail. So people have the liberty to try things, to iterate, to fail, to get stuff wrong, to learn what works. And so, although this is a cliche and it's these are very slippery words, when you research these companies, you realize that there are cases in which this is absolutely true, and then cases in which this is meant to be true, but it's actually not. And so with Amazon, it's totally true. And I say at many levels because, when it comes to their employees at the logistics level, I don't think that is true, right? So, it's totally different. And I believe that they receive a totally different type of compensation compared to directives or employees at highly creative levels that do engage in this type of behavior. But so, and I can't actually speak of what is happening organizationally inside YouTube, but what you can tell is that it's part of a larger company. And so, having a unit within a larger company branch out in a way in which Amazon has done is sort of complex if the parent company doesn't have that culture, that organizational DNA in the first place, which Google has a different one. But arguably in the past couple of years, it's been the pace of innovation has been slowing down, right? So it's for YouTube to branch out in a way like Amazon has, it needs to fundamentally have a sort of cultural organizational revamp so that the train of thought of people that work at the company operates in that manner. So essentially become Amazon organizationally speaking, right? And then going back to the idea of margins, I wouldn't really I wouldn't. The thesis is not about if it's low or high. What I would say is that there's a potential for these margins to go up a lot in the coming years, because fundamentally they have a unit economics problem in the first vertical, which they've used to create this network, which now has over 500 million monthly active users. So Spotify has grown by enabling people to listen to music and specializing in music. But the problem is that labels, so music labels, excuse me, take 75% of the revenue with them. That is why Spotify has a 25% gross margin. Now, as they get into further audio verticals like podcasts, audiobooks, and stuff like that, they don't have that problem with unit economics. They have much better ones. So as they pile these verticals into the network and people begin to use Spotify as more of a search engine, obviously the shape of the income statement of the company is bound to change over time, so long as its competitive position remains solid, which I think it will do, because its ability to iterate and listen to customers and share economies of scale is actually very underappreciated by the market at this point. So and when people look at these verticals, they look at it subjectively, but when you look at the aggregated data, Spotify seems to be leading the podcasting space, and it's true that
Yep.
their audiobooks effort seems rather moderate, so to speak. But if you trace back, if you look back into the company's history, every time they've launched a vertical or a feature or something like that, they start with a very embarrassing version, and then what they do is they begin to pick up information from the marketplace and iterate very quickly, and eventually turn it into something that's a winning value proposition. So when I say that this is going to become a search engine and the margins are going to get a lot better, I'm obviously not looking at the company in a static sense, but what I'm talking about is a company that is organizationally engineered to be something very similar to Amazon. So it has very similar genetic properties. And that currently, with the opportunity of deploying these new audio verticals and stuff, has I think is very likely that I think it's gonna increase its operating leverage meaningfully. And so when you look at it at the stock price, it's the stock is priced. So the company is priced at just I think it's 2.3 times sales. So the price to sales ratio, although it's not very insightful in companies that are in the mature phase, in when it comes to tech, it is a good measure of enthusiasm. So if you look at a company like the one that I'm analyzing now, GitLab, the price to sales ratio is something like 14. So what I can infer from that is that the market is not exactly unaware of the company's potential, right? And then obviously as these companies mature and stuff, the metric that you want to look at evolves. Eventually it comes down to the price to earnings ratio. When it is an accurate depiction of what is actually happening inside the company, right? Which the income statement can be dismissive sometimes. But so when you look at a company like this and it's priced at two point something times sales, and it's growing phenomenally, even though we've been going through a consumer pullback, and it's winning consistently one vertical after another, even though it's competing with some of the world's largest companies like Amazon, Apple, and essentially music is something that everyone wants a piece of the pie of. And so even recently, the narrative a year ago, like with Meta, was that TikTok was going to kill it. But even with this narrative, monthly active users have been growing at a record pace in the last couple of quarters. So this company just has that DNA to iterate and make it happen. And so as it goes beyond 1 billion users, there's actually no reason for which in the long term it can't get to 2, 3, 4 billion, or 2, 3, or 4 billion users. And once it breaks free from the dependence on the music vertical and it has access to much better unit economics, and effectively this becomes a network in which people basically share and consume information on pretty much any topic that is relevant to humanity, then the income statement I think is likely to look very different in
Okay.
5 to 10 years down the line.
And the growth, the future growth doesn't have to come always. Of course, they're still growing, but even as a mature company, the growth could still come if there are more users converting from free to premium, to becoming premium users. So there's the monthly subscription. So the measure using solely monthly active users, of course, it's a good starting point. But then there is the percentage of the premium users versus all the users out there, and whether that is going to increase over time as well. So
Yeah,
in
sure.
theory,
So
right, we could have 2 billion user, let's say in 10 years time, and 2 billion users 20 years from now. But then if this penetration rate, so to say, is double, then it would have a significant impact.
sure. So that's totally right, Costa. So the angle that I'm coming from here is, as I was explaining at the beginning, like um, I'm assuming that conversion rate from MAU to premium is going to remain similar to what it's been at in the past couple of years. So I'm not actually modeling mentally for that. The mental model that I'm outlining just assumes that those conditions like that remain similar what has to happen for the company, for the stock to in the long run go up meaningfully, right? And as you say, this could be a huge driver, but I'm not really assuming for that because I and I assume that over the long run, people are going to still prefer free music when they can get it. Um, so I mean, unless everyone gets relatively, I don't know what can happen for that ratio to go up.
At least
But
percentage wise. That doesn't there
yeah,
that yeah, okay. All
yeah.
right.
But and then like I was on Twitter. I made a long post yesterday talking about this, and then some people were saying, well, Spotify doesn't really pay musicians much, and like obviously the network is full of intricacies and lots of details. But if you look at the big picture, um, the stock has meaningful upside just because I don't think the market is really understanding this company at all.
Sure. And that is there is a potential for you to see a different perspective. I don't know. I think what you do well is look at the company as is and not kind of think of what could change, what could become better. And if you think about it, I agree the feeling that the artists get when they're not paid as much as they think they deserve. On the other side, I can imagine Spotify becoming a big player in a way that it helps them not only gather the audience, but also maybe at some point in time, sell tickets directly through the platform, right? So organize
Yeah,
events. And that's also something that could become big sometime in the future. And they're all there are a lot of scenarios that could happen that just make the company better. And of course, now we are just diving into one company, but I think it's important to, at least for those who have never heard of you, to see the way that you approach the analysis. So you look at the company today, but you're more interested in the potential that the company has to become in 10 years time. That is not
yeah,
seen at the
definitely,
moment by the market.
definitely. So in the tech space that I specialize in, things are almost never what they seem. And so even the boundaries within industries are very blurry. We've seen this, I mean, with the digitization of the economy, what we previously thought was clearly the domain of a given industry, that is just no longer the world that we live in. And so we live in a world increasingly defined by networks. And so networks can morph into something not completely different, but perhaps an enhanced version of what you're looking at present very quickly. Um, and so Spotify is an example of how I think. But if you go through my write-ups, there's a whole bunch of examples in which I'm effectively looking at software that obviously or non-obviously is conforming a network, as was the case with Blackberry. And then, I mean, if you think about this optimistically, all of these networks have a potential to do something meaningful in the coming 10 years. But then the difference between that and actually allocating capital comes down to fundamentally understanding whether a company has these genetic properties that I was talking about. So, just to give you an example, a company like Unity, which gives creators the tools to create 3D spaces, obviously has infinite potential in a world in which we're just increasingly deepening our virtual interactions. And we thought the internet was done a couple of years ago, but now we realize that it's going to drive healthcare, it's going to drive transportation, it's going to drive finance, it's going to drive work, it's going to drive everything, right? But then when you look at the management and you look at the acquisition they just did, it gets blurry. It's not actually that often that I get to see a network that is A, fundamentally misunderstood, B, has the potential to become something radically better and more valuable per share because it has all these properties that I'm talking about. So and sort of layering on top of this the idea that I discard the stuff that I don't like and I only really write about the companies that I do like. I've realized that that can sort of distort my the perception of my audience sometimes. I think
Hmm.
most of my audience is very aligned with the way that I think, but that is how I'm looking at this. Um, yeah,
Maybe a follow-up question on the research process, right? So let's say you do a deep dive on whatever company there is, and you have decided to invest in it. You believe in its future. Of course, now the next step is to keep following whether the thesis it's whether the company is moving in the right direction or not. What that means is the next earning report is out. You have your own KPIs. It doesn't have to be necessarily the same KPIs as everybody else is looking at, right? So whether that's monthly active users as the key KPI, not necessarily the profitability today, that can have an impact on the share price short term. Um, I have an example that I think it's 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 very relevant to what you do. So what you do is you take your own approach, right? You have developed your own way of thinking and you stick with that. There is a um, it's not a secret. It's something that happens on by a lot of analysts on Wall Street. That their targets of a certain company or valuation are very close to each other, and there is a simple reason for that. If everybody estimates a company to be worth more or less within a 10% range from one another, basically they are saying, well, we've looked into the company, we've estimated the potential, and that's it. Now, if they're all going to be wrong, well, who's going to criticize them? They all missed something, right? Now, imagine if there's one analyst who takes a bold approach and says, you know what, all of you are wrong. This is what you're not missing. But maybe he's wrong, right? So by going against everybody else and sticking your own views, which is completely different from the rest, the professional like equity analysts have this. On one side, it can be an opportunity if they're the only ones that are right, but it's also they could be scrutinized if they're the only ones that got it wrong. How could you be the only one that missed this obvious thing? Um, Maybe as a retail investor, as an individual investor, not connected with any institution, this could be seen as an advantage as well because there is no criticism from anyone other than yourself, right? You're managing your own funds, you are making your own decisions, whether you're right or wrong. What are your
Yeah.
thoughts on this? And do you see any advantage that you as an individual investor have over institutions from this point of view, maybe?
So totally, Costas. Like the first thing I would say for an individual investor, one of the statistically the best decision you can take is instead of listen to analysts or non-official analysts like maybe me or something like that, just invest your money. This is not financial advice, but I'm saying that statistically it makes sense. Just invest your money, diversify it in the S&P 500, and just leave it there for life because it's going to grow with the American economy, which, despite the country's difficulties in many domains, like any other country in the world, is still the world's best economy, and it's where people want to go and live and innovate, and where they can innovate. And I'm saying this being Spanish, and it's a country that won't really fully let people innovate, and so that qualitative difference is the source of wealth. So that is the one thing that I think every single individual investor should know. And then the other thing is that, of course, the financial industry has maybe different incentives to the ones that you do as an individual investor. So in many cases, these firms, what they want to do is aggregate capital and then just do whatever with it and charge a fee for it. And they don't, I guess they don't want to be spectacularly right or spectacularly wrong, because what they want to do is probably just do just fine. So obtain the likely best outcome and charge a fee for it. The fallacy of this is that none of these firms are ever, or most of these firms are likely to not beat an index in the long run. And so the best you can do with one of these firms is the market's performance minus the fees that they charge. And then when they do their own strategies and stuff, which are increasingly defined by shorter holding periods and so a very erratic investment style, in my opinion, that's the index's performance minus fees is the best you're going to do ever. You're probably going to do less than that on average. So the solution to all of this is education. And so you need to understand that you're investing in an economy which is driven by companies, by people that work inside these companies as a function of the culture that the company in question has, and that the financial industry, there are going to be firms that have the adequate incentives and adequate philosophy of long-term investment that can lead to outsized performance over the long run, but most of these firms are not. And then most of the people that you see in traditional media outlets are not aligned with you. And naturally, the next thing to do would be to question whether I'm aligned with them. And what I would say is that thought, you should just bypass it by focusing fundamentally in your education. And so understanding that investing in an index is statistically most often the best decision, and that if you're going to invest in individual companies, the most likely thing that's going to happen is that you're going to lose your money. But if you want to um, obtain some form of outperformance via individual stock investing, there is no substitute to doing it yourself. You
Yep.
can use other resources to educate yourself. You can use other resources to quicken your understanding of companies. So you can read one of my deep dives to get a better idea of a company in less time, but that should never be a substitute for your own work. And so, and then again, going back materially to your question about what the actual advantage is, a lot of these so-called professional investors have to deal with expectations of consumers in the financial sector that are equally skewed. So a lot of these financial consumers do not want to see temporary underperformance. And so what a lot of these fund managers do is they jump from one stock to another, trying to mitigate these periods of non-realized losses and so forth. And so what they end up doing is not generating wealth. Again, what they do is aggregate capital, charge fees, and then do whatever with the money and so forth. So
Yep.
the advantage is really in just either going for indexes or understanding that if you buy a great company at a very attractive price or even at an attractive price and hold it for the long term, if that company gains in basically the free cash flow per share of that company rises faster than the index in comparable metrics, you're going to do better. But
Yep.
there is no substitute to educating yourself.
Yeah, I agree. I agree with everything that you've said, and there is no shortcut to that. If you want to invest yourself, I think it's wise that you do the work. It's a pity that sometimes I see, and even people that I know that would spend hours into going into different stores to figure out what is the best TV to buy, looking at all the characteristics, and then when it comes to investing, they just read one post somewhere and then they make the decision, which is not the wise decision, but it seems that there's always this behavioral part of the humans that are just interested in making a positive return in the short run, which is never guaranteed. So it's something that sounds nice, but what I say, if something sounds good to be true, then it's very likely that it is too good to be true. Now, I know that you have looked into plenty of companies. Is there any company that stands out that surprised you the most? And it could be both positive or a negative surprise.
Yeah, Roblox. Very positively surprising.
I think I should
Um,
host a maybe a conversation between you and Edwin Dorsey because I think he had a whole study on, if I'm not mistaken, a short study. No,
I'd be interested to see that. That'd be nice to see.
so I think if I recall correctly, his main topic was about, because it's primarily or it started as a platform for that had a lot of children on it, right, playing games. Then naturally that attracted certain types of individuals who joined the platform that were to abuse that. So that is kind of the point that he was taking. But I think it would be good actually to have a discussion on that, to see just two completely opposing views.
Sure, it would be great. Actually, I mean, I've been my perception of this company has been improving since I did a deep dive on it. And the reason that I haven't invested is because the raw material is children. Effectively, it sounds awful, but
Yeah.
it is literally like that. They have children on the platform. Of course, it's aging up, which is one of the positive developments of the company. That's a very positive one, for sure. But with children, that's a very delicate thing. So I mean, and there's naturally always going to be speculations about that. But I think that this company has been around for, I think it's almost 20 years now, and really the flip side of that is that this could actually be one of the environments in which children or kids or humans of a growing age can self-actualize safely on the internet, because it seems to be like that. They actually invest a lot in safety, concerns. And I've spent some time in the platform in my research, and it seems to be a very sort of it seems to be like a it's an anomalously civil place on the internet. If you go anything like Twitter, Reddit, Instagram, like there's a lot of you would say inappropriate behavior. And then one of the most popular games on Roblox is actually people working on a pizza joint, serving pizza to their friends. This is virtual. It's incredible, but you see people engaging in what seems like very constructive behavior that is unusual on the internet.
Okay.
Um,
So you
yeah,
expect that over time, the when you say it's aging up, you meant that the initial users are now older, but also probably the ones that are joining are also a bit older than like the average age goes up.
yeah. So at the beginning, Roblox had mostly users under the age of 13, and now the majority of the users are over the age of 13, and I think it's 13 to 24, the cohort. I'm not sure.
Mhm.
And that cohort is actually growing faster now than the younger cohort.
Okay.
And so like the main risk for this company is that as its users age, it becomes irrelevant. Because qualitatively, if you think about us 20 years ago, we were hooked on instant messaging, and it changed the way we socialized. And you would sort of have your updates on your status, and that would be a way of connecting with others. And you would have your profile image, and you would use emoticons and stuff like that. That was a quantum leap with respect to our parents. And so when you see the way that children interact in Roblox now, it's sort of incomprehensible to us. It just seems incredible that someone would want to spend time doing that. Um, but the hours engaged in Roblox per quarter are up in the tens of billions. I posted the graph on my Twitter. So this is like Roblox, if it manages to age up over time, can be something like like Facebook, maybe for kids. Maybe say someone who's 18 now using Roblox, if that person retains the habits, which I think is likely, as we've retained the habits of instant messaging and stuff, and Roblox manages to continue being relevant to that person over the next decade, I think that if that hypothesis holds true, in hindsight, Roblox is going to be, I think, um, a global social network in the making, because the habits are so different that you look at a company like Meta, and sure, Zuckerberg is an excellent capital allocator. So I wouldn't say that Meta is doomed because of this. I'm not saying that at all. But the habits that Meta caters for are so different to the ones that Roblox caters for that there is this huge generational disconnect, which I think is being underlooked.
Okay. What I really liked is that you make, I would say claims, but kind of assumptions about the future that are different. And sometimes it's very bold assumptions. For example, that Roblox could be one of the competitors for Meta. I mean, personally, I think that the chances of that are low, but it's perfectly fine to have different views, right? It's the future, and nobody knows what will actually happen. I'd like to ask you when it comes to this particular company, and I think this will be one of the last questions. I want to be respectful of your time. Um, are you worried that the world is headed that way? That actually the number of hours that is being spent are online, virtual, serving, creating pizzas of some sort, instead of being outside like it was in the past. And I'm not saying that um, I don't want to share my opinion at the moment. I'm just trying to get your perspective on this because it's a different world, right?
Yeah, I still am very. I don't like that version of the world. And before I even looked at Roblox, I think I was thinking pretty much what everyone else was thinking. The metaverse is firstly a fad. This is a vision of the world that I don't want to see. This is going to be terrible for humans, etc., etc. But then diving into the company, I realized, as I was explaining earlier, which I hope it came across well, is that within this trend that seems unstoppable of people spending more time online, these guys have created an environment that is surprisingly constructive for young humans. And so, I mean, the fact that I don't like the idea of getting deeper into the virtual world for humanity in general is not mutually exclusive with the fact that that is the reality. So that is the reality. And
Okay.
then the surprising bit of this is that these guys have been able to create an environment that's actually more good than bad. Um, Instagram, for example, has many positive effects. Like it connects people, it helps people earn a living, artists, creators, and stuff like that. But then it has this tremendous component of reprogramming the limbic brains of users, making it really addictive, making it a waste of time in many ways. Roblox to me seems qualitatively different, and what I think that they can do is in the long term they can sort of refactor the educational system, because they've created this environment where kids like to hang out, they like to engage, as I was saying, in conduct that is anomalously civil given the nature of the internet. And if they layer education on top of that, I think it can be quite cool.
All right. Thank you for sharing your views.
Sure.
Now, one of the last questions that I have is, what are your favorite books? Is there something that you'd like to share for the viewers and listeners? Could be finance, could be non-finance, it could be biology, it could be history, it could be anything.
I mean, I have so many of them here. Uh, so look, one of the books that actually I think was fundamental in shaping my thoughts when it comes to investing in technology is Energy by Richard Rhodes. So it's basically a sweeping history of energy in human civilization. And so I gained two, I think one, maybe one key lesson, two key lessons. The fact that, at every single point in human history, it seems like we were on the final frontier of energy and that we were going to run out. Um, that is a very recurrent theme through history, and I think that's a sort of prevailing sense that is implicit in the shift to renewable energies. I think like we feel like we just have to go to renewables even though they suck, because we can't go forward. We've always been able to go forward, so that's lesson number one. Lesson number two is that the evolution from one energetic platform to another, which applies to transport, is largely unpredictable. So the fact that everyone absolutely believes that electric vehicles are the next platform for sure, I think raises my alarm. Its history would suggest that we shouldn't be too sure of this um, right now.
Okay.
And then so that sort of framework applied to technology, I think, is very useful, because at least it's going to be a speed check. It's gonna get you in the habit of questioning the predominant narratives and have an understanding of how historically these narratives have been violated one time after another. That is just a constant in nature.
Okay.
The other book that I think was transformational for me, and it's actually not a very well known one, as is this one by Richard Rhodes. It's called The Wealth and Poverty of Nations. Can't remember the author. I think I may have it here, but my eyesight is pretty poor lately. It's called The Wealth and Poverty of Nations, and it's basically about it's one case study after another about how countries have gotten rich, and in many cases have gotten poor. And one example that I liked a lot was Egypt, which back in the 1800s, and I believe this is the case now, had all the natural resources to become a cotton superpower. And back in the 1800s, clothes, so clean cotton clothes, were a differential layer of value in the economy, like today is information and networks and stuff. So Egypt could have turned into a basically, I wouldn't use the term superpower, but into a very relevant country at the time. And so there was a guy called Mehmet Oygum, if I pronounced that well, that realized this. And so he mobilized resources to industrialize the country. And so the country bought some of the best machines, I believe it was from the Netherlands and so forth, and they installed them there and they trained people. And there was basically no single reason for which Egypt couldn't succeed. They had the natural resources, they had plenty of people to do the job that were well trained and so forth. But then output began to wither, and it failed ultimately because of the culture, and because it was a very common practice for some reason for people to steal the screws and the parts of the machines at the factory. So what I learned from that case and from many others in the book is that actually culture is the backbone of economic progress. And this applies more atomically to companies. And I think that this is an understated factor when looking at stocks, that of course, we've all heard this phrase, stocks are pieces of a company. Great, we understand that. but companies are a bunch of people working together. How they work together, which is the culture, ultimately tends to determine their fate. It's a bit like a personality for an individual. And so that is the main takeaway from this book. These two books, I think, give you a very differentiated view of companies and investing that I think is valuable.
Oh, that makes sense. Honestly, when I look at a company there, if I have to look at two things, one would be the employees, the culture, whether they're satisfied or not. And then the second one would be the output in terms of product or service. If you have the two first of all, employees that are satisfied, that do a great job, and then products and service that are at an acceptable level where the customers are happy. I mean, that's ultimately a company that is good at least from those point of views. If one of them is not good enough, then I mean, the business is not going to do well in the long run. Now,
Very interesting. I
lastly,
agree.
where can people find you? Could you share more about that?
So
Mentioned
you can
Twitter and
find me
Substack
on,
already.
yeah, yeah, absolutely. You guys can find me on Twitter. My Twitter is AOC 2022. You can find me on Spotify now, which is a novelty, and you can find me on Substack. Um, in any of these platforms, you can just find me by typing in my name, Antonio
Yeah.
Linares.
I will leave links in the description to everything that you've mentioned, so the viewers and listeners can just click and then they are there. Maybe one question: what are your thoughts on YouTube? I see that you have quite I think, an acceptable setup. So, can we expect Antonio Linares also on YouTube?
Yeah,
Have you put some thought
I
into
like the
that?
platform and stuff. Yeah, I just have two issues with it, which is one, the censorship. I don't. I'm trying not to invest in platforms that have a tendency to censor stuff because you never really know when you can be against the regime. Um, and I think it's a shame to invest in building an audience and then getting cut off because I mean that centralization is an issue that I'm struggling with as
Yeah.
a creator in general. But
Have you thought of using the same clips that you have on Spotify and just share it in one more place like YouTube? I'm
oh
just
yeah, yeah,
wondering that it doesn't seem to have any downside, right?
I'm sharing them on X at the
Yeah.
moment. I'm trying that,
Okay.
and yeah, I mean I was thinking about YouTube, but I don't know. I think I have to maybe mentally unlock that, but I just don't want to have to focus on too many metrics.
Oh, I
You know,
understand.
I'm sort of comfortable at the moment with Spotify and X and Substack.
Of
I
course.
mean, if who knows, maybe YouTube is where I can grow fast, but I might try it eventually.
All right. Thank you, Antonio, for your time. For the viewers and listeners, feel free to check the links, follow Antonio. Make sure to comment on his bold assumptions about the future, whether that is in tech, healthcare, AI, metaverse, whatever that may be. Antonio, we keep in touch. We might do another one. I have plenty of questions, but I mean, we are probably at around an hour of recording now. So we can organize another one, different topics. I'd like to thank you for your time and see each other again.
Thank you for having me. This was great fun, and I'm definitely looking forward to the next one, Costa. So again, thank you very much.